Hi, my name's Scott Dahl. Thank you for tuning in to another one of my podcasts. Today is Friday, October 24th, and we're trading right now. It's a little after 10 o'clock Pacific time. I wanted to get this podcast up, and because when I see something important, I want to discuss it. Now, we're having a fantastic day today. Everybody knows that, but let's take a look at the internals and see what this means for the future of this market. I want to start off by saying that CEOs of companies, they are looking for a bubble. They can look for a bubble all they want, but the bull market stops when it's so massively euphoric that people can't see a negative. We're not there. Nobody knows when a bubble occurs until after it's popped anyway. So we're going to take a look at the bubble of 2000, the dot-com bubble. Secondly, is I have up a chart of breadth. This is my favorite measure of breadth. This is the one I like to use. There are a lot of different measures of breadth. This is the advanced decline line on the New York Stock Exchange. I don't want to waste time and explain breadth again. I've explained it a lot in previous episodes, but it's incredibly important because as the stock market moves higher, you need more and more stocks that are continuing to move higher as well. That's strength in the market. So if the breadth starts to go down, if less and less stocks are participating in the up move, that can be seen as negative. Analysts have been concerned about breadth going down. You can see that this is the advanced decline line. We're going up grade, but then you see this downtrend line. So these are measures of breadth. It's been going down for the last couple months. Breadth is not a coincident indicator. And let me tell you what I mean by that. Let me show you what I mean by that. What I've got up right now is I've got a chart of breadth back before the 2000 dot-com bubble. You see all the years I've got across here. I've got from 92 all the way to 2008. Got a lot of data we're looking at. Breadth started down March 31st of 1998. So that was a warning sign. When did the stock market stop going down? Let's take a look. The stock market didn't start dropping until March 29th of 2000 right here. So breadth started down here. The stock market started dropping here. It was almost to the day, 2 years of waning breadth, dropping breadth that broke the stock market. So breadth going down, this breadth has started going down here for the last couple of months. It could have been material, but it wasn't. Let's go back to today's breadth. Well, we had this downtrend line that lasted a couple of months, and what have we done? We've broken out of it. So we've broken out of the downtrend lines. That's an indication that breadth is back, breadth is strong. Let's take a look at the New York Stock Exchange. Same story. New York Stock Exchange has broken out of this downtrend line. See this downtrend line here? That's a couple months. So we've got breadth that broke out of the downtrend. The New York Stock Exchange that broke out of the downtrend. Those coinciding would give us an indication that we're going to see higher prices. Now, what's the most bullish thing that the market can do? Go higher, right? Make new highs. So we've got the NASDAQ, the tech stocks that are making new all-time highs. How about the Dow Jones Industrial Average? New all-time highs. S&P 500, new all-time highs. My target, remember my target on the S&P 500, 6,807. Here's my downside target. Here's my upside target. I set in other targets. I don't have them up right now. My target was 6,807, and what do you know? 6,807. So we're at 6,806.42. That's a high. So we're hitting another target. This is important. These are value stocks, new all-time highs. So not only is growth going higher, the growth stocks that we're all focused on value stocks. So there's more and more stocks that are participating. So I've made my point that we're continuing to have this strong participation in the market. It looked like it was waning, but it's not, and it's back. Now I want to show you one more breadth item that is a very, very good indicator that I've used for years. I've referenced this before. This is another breadth indicator that was created by a gentleman by the name of Martin Zweig. Unfortunately, he died young in 2013, but Zweig was a very good talented technical analyst, fundamental analyst, and money manager back in the 70s and 80s. He came up with what's called a Zweig breadth thrust. And what it basically is it's like a tsunami. It's like all the water comes out and then it comes blasting back in. And here it is. It's up here. I'm going to spread it out. It's real simple. We're going to do a count. If you go down through this 40 here, which we did, if you're above 62.52, in 10 days, you've got this tsunami and you've got this massive thrust. So let's count these days out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At the end of the market day today, if this is over the 62.52, that's a Zweig breadth thrust. Those are very reliable, and that would portend to significantly higher prices in this ongoing cyclical bull market. Let's say it doesn't. I don't know. We're not at the close yet. But just the fact that it's broken out of the significant downtrend line, that's a positive for this market. So obviously, you see my point. The crowd's typically wrong. We're in a continued cyclical bull market. Interest rates are coming down. Inflation appears to be dropping. It's not going to last forever, but we're in a cyclical bull market. We're in a shorter-term bull market. In the long term, secular bear market that's punctuated by high inflation, high interest rates. We're just getting a reprieve right now. So stay bullish and we'll continue to make money. If you want me to look at your portfolio, if you're lagging behind the index or if you're not doing as well as you think you should, if you're not hearing from your investment advisor, contact me. I'd be happy to look at your portfolio. It's Scott@DahlCapitalAdvisors.com. 949-497-6366. So I hope you enjoyed this. I hope it helped. I'm looking forward to putting more of these up in the future when I think something is important that I need to share. So thank you very much.